How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday sessions video. If you are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week, and we break down some of the analysis we have performed, giving you guys a better understanding on how to tackle the markets. Now, this is obviously great for those who are wanting to learn how to trade independently, but it's also good for those veterans that are just looking for additional confluence with their own analysis. So if you guys do go on to enjoy this video today, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions or queries with regards to the analysis we go through today, just leave them in the comments below. Now, with all that being said, people, let's jump straight into today's Sunday sessions video. So the first pair I'm actually going to go over in today's Sunday sessions video is the euro to the US dollar. This is a pair that we were looking to take part in last week. However, price didn't actually trade into the zone that we were looking to buy in from. Now, what we have seen is just before the close on Friday, price has actually started to trade us down and into the area of interest marked out here. What I would love to see is for price to actually trade down and into this area of demand before taking us up into the market. Now, if we wanted to be less preemptive and wait for more confluence before entering in on this market, then a wise thing to do would be to wait for a break in this protected high here. And the reason for this is because price is quite evidently bearish at the moment. So to buy into a bearish market is quite risky. But if we have a break in the last protected high, that would tell us that this bearish structure that we are seeing at the moment has actually come to an end and new bullish structure is ready to be printed into the market. So that would be a less preemptive approach. Now, if we wanted to be a bit more aggressive and we wanted to get in early, then all we need to do is wait for price to pull back down and into an area of interest. So this one here that I've got marked out. What I'll do is I'll provide the details and price in just a moment. But for price to trade down and into this area here, break structure to the upside fractally, that confirms that the corrective wave trading down into this demand zone has come to an end, and the new impulsive wave to the upside is ready to take place. Now, the reason why I've marked out this area in price is because, as you can see here on the daily time frames, what we are marking out is actually a 1 day hidden order block. What we could do is actually adjust price, and you can see this would represent an order block. Price is trading into that. However, I feel price needs to come deeper. If we go back to the 1 hour time frames, you'll notice that actually we also have a fair value gap. This would be a very interesting area for price to come and trade down and into. If price was to trade down and into this, that would completely clear that inefficient structure, allowing price to trade higher. So potentially we could see price come down this low. A lot of traders would be expecting price to trade down and into this area because that's the last sell to buy region. But price may actually come down to liquidate this area here before taking us higher. So what I'll do is I'll actually provide you with the increments of this area here. You can see them on the right hand side. So we've got 1.0217 to 1.0238. So this would be a nice key area to get involved in those buy positions from. Again, all we need is for price to trade down, for price to then break structure to the upside to confirm the end of that corrective wave trading us lower before taking us higher in the market. So this is definitely a good market to be looking out for this week for any buy positions. We just need to wait for the right confluence and confirmation before we get ourselves involved. But that is actually going to summarize my analysis for the euro US dollar. Heading over to the gold market, you can see here that price is rejecting from this area of resistance, which is essentially an area of supply. There's obviously a lot of liquidity held here. So every time price comes to trade up and into this area, we're just seeing an introduction of supply, which is pushing price lower. It's forcing price to stay beneath this zone, essentially. I feel we will have a complete reversal and a continuation to the downside. However, I could be wrong. As we know, gold is always appreciating. It's a precious metal at the end of the day, so it's always going to appreciate. I just had it in my mind that we were going to see price completely correct itself to the downside to clear this area here that I've got marked out before taking us up to breaking those new prices and setting those new highs. Now, again, in order for us to get involved in this market this week, we could look to buy in before we go short. And we would do this by getting involved in the market once price pulls back down and into this hidden order block that I've got marked out. So we'll just zoom in. Again, you can see that what we are looking at is a wick to the upside followed by a wick to the downside. That represents sell orders or selling pressure within a bullish impulsive wave. So there's obviously demand sat there waiting to be introduced into the market. So we may see price pull down into this zone before taking its next move to the upside. And then we may see price actually reverse trading us lower. The only other thing that I think price may do is trade down and into this area, completely absorb price within this area here, breaking that barrier, and then using that as support before a continuation to the upside. And then that would actually be going on to create new highs in the market. So that is also a potential, okay? So these are my thoughts for XAU USD. Either we're going to see price pull down, trade up and into this area, and then break to the downside because this liquidity is too much for price to trade higher. Either that, or we're going to see price trade down, break up, and actually surpass this area of liquidity, completely absorbing price and then using that as support to continue trading price to the upside. This obviously depends on the fundamentals as well. As we know, Trump is taking over as of Monday, so God knows what's going to happen with the likes of the gold spot. It'll be very interesting to see how price plays out tomorrow with this market, because as we know, the gold spot reacts sporadically whenever we have any kind of fundamental news to do with the US dollar. So those are my two options for the XAU USD market. So price pulling down to pull up and into the supply zone before trading lower, or price pulls down, completely absorbs price and then continues to trade us higher. So I would be looking to buy into this market next week, using this as an area to go from, and then whether we hold as price breaks or we close and prepare for shorts. But that's my analysis there for XAU USD. Heading over to the US dollar Swiss franc. This is another market that we have been taking part in over the course of the last week or so. Price has played out very, very well from this fair value gap. But what we are seeing is price correcting itself, as it should. With every impulse comes a correction. We are simply seeing price impulse to the downside. Price is now pulling back to conclude its corrective wave. If we just go back to the 1 hour time frames, the 30 minutes in fact, you can see the order block that I've got marked out. I want to see price trade into this, absorb up until the 50% mark, and then a break to the downside. I think this is some kind of liquidity sweep, some kind of manipulation in the market, and I think we're going to see actually price then trade back up into this 50% mark, manipulating those who are wanting to actually continue buying in, and then price will then plummet to the downside. So manipulating both parties. So this week I will be looking to short this market, but it's a case of waiting patiently. So sitting on our hands and waiting for price to play into them. We need to wait for price to absorb this area, break structure to the downside to give us the confluence we need in order to place those positions to the downside. Very quick analysis here on the US dollar Swiss franc. We did take part last week and profited very well. We just need to wait for that next opportunity. Now, just to conclude on the Great British Pound to the US dollar, we've seen price trade into a large area of supply. We've seen breaks of structure to the downside. This is suggesting longer term bearishness. This in itself would be considered a break of structure. We are seeing a lot of weakness in the Great British Pound at the moment. So you can see that I have marked out two areas of supply. I wanted to see price trade up and into this. I wanted to see a bit of strength being introduced before that move to the downside. However, we just continue to see price sink essentially. So this now would be an ideal area to see price reverse from. Trading up before trading us lower. This would be considered a break and retest. So breaking an area of support in some people's eyes, price then comes back to retest this area. We know that this is a fair value gap, price trades lower. So it's following the laws and the strategy, many different style traders. Now, again, if price decides to actually pull back, absorbing that zone, we then may see a continuation in bullishness, but that would only be temporary, trading up and into this area of interest here, and then we'd have that move to the downside. But ultimately, I think this market is bearish longer term. We are going to see some kind of correction, I believe, some bullish correction before that move to the downside. So again, we could look to take part in the corrective wave in some buy positions, but we need to be very careful because those buy positions can quickly turn sour if we see a lot of supply being introduced and price move into the downside, because ultimately that is the higher time frame structure of this market. I've gone ahead and marked out these 2 areas for you anyway, just so you guys can go and apply them to your own charts. Just wait and see how price plays out this week. But that today, guys, is going to summarize my Sunday sessions video. I hope you've enjoyed. I hope you've learned a thing or two. As I said at the start of the video, if you have any questions or queries with regards to my analysis or my strategy, then please leave some comments below. More than happy to get back to you. And if you did enjoy the video, don't forget to leave it a thumbs up. Now, with all that being said, people, thank you very much for watching, and I'll catch you all in the next video.